All right, meanwhile, stocks are down, though, amid other fears that the administration's agenda could be stymied, slowed, delayed, stopped, whatever words you want to use here. But Atlanta Fed raising second quarter GDP growth, nevertheless, to 4.1%. Market analyst Dani Hughes here. Heather Zumarraga. Heather, are you worried that that agenda is at best delayed?
Yeah, the agenda has not affected markets in a negative way thus far, or lack of the agenda until today. But perhaps this is a straw that broke the camel's back. The investigations, as well as Russia, the markets are saying, despite all these debacles, tax reform may not get passed. And that's what was leading the markets higher. The NASDAQ was at new highs yesterday, and technology as well as financials are leading us lower today. The Dow down 269 right now.
You know, what if we're missing something here, Dani? Not you guys are, maybe that I am, that given that GDP report in excess of 4%, or could be, and they're always wrong, I understand, we might not need tax cuts as badly. We always welcome them, we always want them. I understand many prefer paying less taxes and more, but that would be good news for the economy and these markets going forward.
It would, but, you know, these markets have been trading because we're anticipating a better tax environment and because we're anticipating regulatory reform from this administration. Don't forget, that's why this market is up as far as it is. Perhaps it's ahead of its skis. I think we're seeing that today. I mean, if we were listening last week about, you know, the VIX is dead and volatility is dead, that was the time to buy volatility. But I do think that there's a number of reasons that the market has still remained steady. It's kind of been that big sister to the little brother who's crazy in Washington because of those reforms that we're looking for, because earnings have been pretty good over the last quarter or two, and they're anticipated to continue. And in addition to that, a lot of investors' purchasing has become passive. That means they've been using technologies in order to buy without looking, and that lends itself to more stability for these markets.
And there are fewer stocks. The supply has gone down, so it doesn't take a whole lot more demand to do that. But go ahead, Heather. I'm sorry.
Yeah, when you look at the Atlanta Fed, you said 4% expected for a second quarter. That's just unbelievable. I mean, in my opinion,
you don't buy it.
No, first quarter GDP 0.7%. We blame it on the weather. It's too hot. It's too cold now. It's just right. I mean, I can't buy a 4% GDP unless we get an enormous uptick in auto sales as well as consumer spending. And I don't see that right now.
You know, Dani, I was looking at this as well. What if, hypothetically, and I'm not saying it's justified, I just say if this plays out like a summer of '73, the last time we had a constitutional crisis, and again, I think even that's overstating things right now, but we have a summer of hearings and back and forth. How would that go for the markets?
Well, it's gone so far. I mean, all eyes have been on what's been going on in this administration from the get-go. It has been driving every headline, and the market has been steadily pumping away in the background and not created any kind of waves. I think if we continue to have, I really think that today's market downtrodden has a lot to do with Trump and has a lot to do with those questions that you're just talking about, Neil, and people starting to say, hey, if there's some trouble like that, does that mean the agenda's on hold for another year? So there's going to be a lot of disappointment about, again, tax reform and regulatory reform.
Heather, you know, interest rates have been coming down. Maybe a flight to quality, maybe something else, or an ominous read might be, oh, they see a slowdown coming. Do you?
Flight to quality, flight to safety. The U.S. may be the best place to put your money. You know, you reference there's nowhere else to go. With the 10-year at 2.24%, 2.23 now today, that's anemic. That's in terms of growth in the economy. It's not showing inflation. We're not getting wage growth. And yes, it could be impact of people really want to buy the U.S. Treasury in terms of safety. But I think it might be more than that. And the bond vigilantes may have it right this time, and maybe a telltale sign that markets may be headed for a correction here, at least a pause.
Yeah, or use this as an excuse to do it. Ladies, thank you both very, very much.